Good morning, team. Welcome to Swing Trading Live. We have a lot going on. The market is up big, gap up and trending up, and the aftermarket and pre-market hours. We got a lot to discuss here on Friday, hoping that the gap will continue. But again, we have levels that we need to discuss around that. Again, we have some key levels that are going to play in as a huge factor for today in this gap up. And so again, we want it to continue, but we'll see what the uptrend has. So we'll be looking at that here, and then also be breaking out some top stocks and stuff. So anyways, let's bring up the chart and get this party started. So as always, you can see here, this was kind of what we were looking at. We were looking at a very range-bound day yesterday when I left the live stream, and we ended up getting that very range-bound day. So you can see here how we ended up trading range-bound, but we closed near the highs. You can see here when we closed the market, we closed right here near the highs, and then we ended up gapping up. And then we just kept running. So again, the gap up was there, and then we kept running. So what does this mean, and will this be sustained? So let's actually zoom out to a one-day chart first to kind of get our long-term trends established. So when we're looking at the long-term trend, what we look at is we look at the long-term being established and that it looks like it's trying to trend up here. So we could potentially be seeing this trend start forming here. You can see how it connects this low, and then now this low. So we could be trending up into here, which could lead to two possible scenarios. Number one, where we trend up, we end up forming this little triangle, and then we break out further to the downside. So this is one option here. Where we try to trend up and then we just break down and then maybe even break down further. Option number two is we come up and we break through here. We come up to the upside. So again, we have two different scenarios here that we're watching out for, but that won't happen for another couple weeks. Because again, you can see here each day candle, so it's going to take a bit to get there. Again, I see a lot of consolidation in the market coming until we have the November session, the end of November. Where we have the midterm election season, and then that concludes, and then that will bring some clarity to the market and hopefully some direction as well. And statistically, that's been proven. So again, that's kind of what we're looking at there. When we zoom into, let's say, 5-minute chart, you can see here that the market is gapping higher. The good news is that we're following what is known as a 10% continuation play, which is where we have an upper portion of the range, and the market from that previous day closes in the upper 10% of that range, and then it starts trending higher. Now, what is the signs of trending higher? Well, it means that we're looking at this high. This high becomes a new breakout level. If we break out above this level, that becomes our buy zone, and we can break out above this and purchase calls or stock or whatever and go long above this level. So that's kind of what we're watching here. You can see that the trend is up, but again, we have a couple scenarios here for this. So again, this is pre-market activity. We still have about 30 minutes until market opens, but what we should be looking at is on SPY. This right here and wherever it opens will be considered a gap. So again, what we could see here is the market come down, fill this gap, and then head higher. That's option number one. Next, you can see here how we do have a little support line playing in right here. So we could have option number two, where we hit this support and then come up for a partial gap fill. Second is that you can see how this triangle starting to form. So we kind of trade in this range and then break out above this triangle breakout range. So that is what we're looking at for an uptrend to happen. For a downtrend to happen, again, we're going to break this level, and then continue down. So again, this will be our line in the sand level, aka yesterday's yesterday's high will be that support level that will now turn into that line in the sand. So anyways, the reason being is because that line or that resistance was super important. Then we broke above it, and so now it's going to act as support. And so that's what we're looking at for bearish. If not, we're going to stay between this range and this range and have a very neutral day. Either way, again, I'm expecting bullish. I'm hoping, again, that the market continues to trend up. Again, we are in a long-term downtrend that's with an immediate short-term trend. So again, this trend can continue all the way up to around 4-1. But again, we'll be watching that. So kind of the game plan for the uptrend, downtrend, and whatever. Looking at the economic market outlook, what we're seeing here is not too much news today, if I remember correctly. Yeah, so what we have here is FOMC member George speaks, FOMC member Waller speaks. and the final wholesale inventories month over month. So again, nothing too much to be reported today. Nothing major like we saw yesterday with the Fed Chair Powell speaking, and then the crude oil inventories and the natural gas storage. So again, nothing too much today. But again, we will have some volatility towards the middle of the day. And if we're looking at top stocks today, we have VNOM, we have LRN, we have DRE, HWM, LIC, New, and whatever, all these stocks. If we're looking into these stocks or top stocks, again, what we're looking for is a great buy and above 85% trend score. And also, what would be very helpful is looking for a stock where both the stock, the sector, and the overall market are in congruence. And congruence mean they're all in uptrends. And again, if they're all in uptrends, that's going to put all the odds in your favor to have a very successful trade. So that's something that should be being watched as well. But yeah, so these are our top stocks. We'll get into those in a second. We covered the market breakdown. We'll cover it more in a second after we check out this trading video.
Today, we're going to determine volatility from the trending band. So we're going to go over what volatility actually is and how you can determine that from the band. All right, so let's get into that right now. So why is this important? Well, volatility is defined by, in my words, how much a stock moves and how quickly that stock moves. So more volatility is going to equal greater risk or more risk. So examples of this is Tesla. Because Tesla moves so fast, it's said to have a high volatility. And because it has a high volatility, which means it moves fast, you're going to either make more fast or lose a lot in a short amount of time. And because of that, that is a high risk stock or a high volatility stock. Now, Coca-Cola, on the other hand, because it moves so slow, it's such a big chip, it's a blue chip stock. It has a low volatility, which means it doesn't move as fast. So that's going to be those who like less risk. So let me give you a better example of this, okay? So if you have a higher risk tolerance, which means you're okay with day trading, you're okay with taking more risk, then you'll be more comfortable or you'll be okay with high volatility stocks. Now, if you have a low risk tolerance like myself, then you'll be more comfortable with low volatility stocks or making sure that your stop loss is set up in the right way. So now let me show you how to determine the volatility of a stock from the trending band indicator. So as you can see here in this picture, this is the trending band indicator, and the distance from the middle will show our volatility. So as we can see here, this gray line in the middle is going to be our 200-day moving average, right? But what the sides are is going to show the amount of volatility or the expected move we can see on that stock. So I don't want to confuse you, but just to look at it here, when these bands are closer together, the stock will move slower and safer. When they start to get larger, that means the stock will move faster and have larger moves. So what does this mean for you? It means that if you like lower risk stocks, make sure you find a stock that has bands that are close together. So that's going to be a lot of the blue chip stocks. But also, you can, if you like to trade something that's faster, you're going to want to look at the bands, because if they're further apart, for instance here, you know that stock will be moving faster and quicker. So another way to use this is to know that when they start to contract, when the bands start getting closer together, that's going to be your safer entry, right? Because it has lower volatility, and when the volatility is lower, it's typically safer. So for instance here, when the volatility was low, the bands came closer together than they were here, and then they gave you a nice entry to buy in later, and then the volatility picked up. Now here you can see we have this huge dip and this huge spike up, and we have that because look, the bands are super far apart. The volatility or the movement of the stock is large, is fast. So again, I hope this made sense. It helps you determine the volatility of the stock, which helps you determine great entry points. Sorry about that. And it also helps reaffirm to you if that is a good stock for you, because remember, you want the stock to match your own risk level and risk tolerance. Thank you for watching, and I hope this made sense.
All right, so for those who are new, or if you're joining in, we have three kind of outlooks for the market today. Let me just clear up the chart and redo it. But again, the market has gapped up huge so far today. So this was yesterday's trading activity. We had a high here on Thursday of about this level. And then this is all the aftermarket and pre-market activity. So the aftermarket activity, we gapped up above this level, and then we just kept trending up. So again, we're seeing a lot of strong action, but the question is, will it continue, and what are our plans for it? And so again, when we look at this, we can come to a couple of conclusions. And again, there's always three outlooks on a stock: uptrend, downtrend, neutral. And so again, when we look at those levels, that's kind of how we're going to assess it. So how would an uptrend continue to play out? Well, we obviously have a strong resistance here because we double topped at this level. So again, something we could be watching for and expecting is this in our uptrend phase. One, gaps fill 90% of the time. So again, when the market opens on the SPY or the S&P 500, this section right here will be a gap. And so we'll probably come down, fill this gap, bounce at this level, and then hopefully head higher, right? Option number two, because you can see that this has another strong support level, is that we play into this level right here. We come down, we do a partial support or a partial gap fill, and then we bounce up and head higher. Next, we have the possibility of seeing a triangle breakout. As you can see here, we're kind of forming this triangle breakout where we're coming in. So again, watching for the consolidation here in this range and then a breakout above this. So again, we have three different types of uptrends and how they're going to play out. Again, outside of that, when we're looking for a bearish day, is again, we're going to see the market drop below this first support and then head lower to this support right here. This being a very, very strong support and value level because of where it closed yesterday. So again, watching this level, if we get down to this level and we see it break this level, then we can expect a retracement back down here, if not further, because that's just showing that, hey, the bulls actually can't hold this. We had a lot of optimism pre-market, but now that the real volume is here, we just can't hold. And so again, that is what we're looking to be bearish. However, neutral for the day will be roughly staying within this range. It may come out it may go outside of those ranges a tad, but watching for the market to stay within these ranges would be a very neutral day. So those are the options for uptrend, downtrend, whatever. If you think we're going to be in an uptrend, put 1 in the comments. If you think we're going to be in a downtrend, put 2 in the comments. If you think we're going to be neutral, put 3 in the comments. That'd be fun to see. Anyways, so that's kind of what we're looking at from the market perspective. From top stocks perspective, we have VOM, we have LRN, we have DRE, we have HWM. So again, let's take a look at a couple of these stocks. I want to look at DRN, LRN, HNA, NU, CMS, and WRB. Actually, VNOM looks kind of curious. So DRE, let's make the viewing a bit better for you guys. That's why I made it this way. Enable full screen. Settings. Go back. Here we go. Now we have a bigger chart for you guys to see on your end. So we have DRE here, pushing higher. Great buy. Trend score 70. Performance history, a 12.76% return a year. Really good. Sector analysis. It's in the financial sector. And again, the stock is in an uptrend, the financial sector is in a downtrend, and the overall market is in a downtrend. So again, we want these to all correlate, which is going to be very hard right now because of the given market. But once these all unite and sync and are in congruence, this is going to be an amazing trade for literally any stock. Once any stock is in congruence between the stock, the sector, and the overall market. We have trend score here that kind of explains why we have that score. Mainly the score is being held down by the overall market rating. If the overall market rating was at least 70, then this again would be a lot higher, maybe an 85% trend score. But again, that's kind of what we're seeing there. But DRE looks like a great play from here to roughly 65. So again, trading this range with the stop loss around 57.50, you can trade upwards. Again, that is one possibility. Let me refresh. Looking at this, oh cool. Anyways, LRN looks very range bound. Let's take a closer look into the chart. You can see here how choppy this stock is. Obviously, it's still in a consistent uptrend. What I mean by that is that the lows are progressively getting higher, and the highs are getting higher as well. But it's very choppy in this movement. where it's going up and down a lot. But still very consistent. You can wait for it to trade up into this range and then trade down. Then probably buy around the $36 support level, given you have a dip buy setup. Again, being a doji candle followed by a strong green candle. That could indicate of you of a dip buy. So LRN, be looking for a dip buy around the $36 point. Excuse me. HWM. Heading higher. Let's take a look at the trading view chart. You can see here, I don't really like this because you can see here how we have a solid top and a solid bottom. We may be entering an uptrend from a technical basis, but we're only going to be trending up for about 35 to 39 while we have this much potential downside. So again, the trend is just not worth it for the risk to reward setup, and that's one way to assess it. Now, again, is it entering an uptrend? Do you have potential? Absolutely. Could you just stop pause here? Yeah, but this is just not a trade that I personally would like to make, but others can make it and be fine. NUE trading chart, buy above 146 and you can trade up to 181. This was like a very great trade, great position. Again, looking for the technology, non-energy minerals to head up. Anyways. Yep. Anyways, those are the game plans for the day. Keeping it short and sweet, so you guys know the pre-market game plans for the overall market: bullish, bearish, neutral. Again, thank you guys so much for watching. Fridays are always short days, but I will see you tomorrow. Monday at 8 a.m. Central Standard Time to break down the market, do top stocks, and more.